Yes guys, Jess here, back with another video. You read the title. We have a massive trap underway right now, in my opinion. We've grabbed downside liquidity, as you can see, at the 95k mark on the 24-hour for the liquidations. And if we zoom out a little bit to get a more holistic view of the liquidations, you can see on the chart that we've grabbed most of the downside liquidity, and now we have a bit more left in and around the 94k mark. However, we do have a lot above us as well in and around 103k mark. So we need to be evaluating each scenarios. I have a lot of charts prepared for you guys, so make sure to be tuning in to the end. We'll be covering all the different charts, all the different outcomes in the market, and potentially be positioned for the next massive move. Before we get into the analysis, make sure to smash up that like button. Let's try and get above 15 likes again. That would be absolutely insane, guys. And with that being said, let's get straight away into this banger. Bow. As you can see over here, Bitcoin has been dumping to the downside very aggressively ever since losing our 100k key psychological level over there. And you can see that we have the presence of a 3 black crow, which is 3 consecutive relative full body candles. As you can see over here, it typically indicates a potential reversal in the market where you come on off bullish market structure, you form the 3 black crows, you can have a consolidation and continuation down. So is the bull market over? We definitely need to be looking at all the scenarios and be checking if we are actually missing some key information. Ask, why are we dumping down so aggressively? What's actually happening in the market? You can see over here we had big news yesterday for crypto, and this was the US JOLTS data for job openings, and we had the ISM index data as well at the same time. And you can see that both of these came in hot. So there was the JOLTS data where there was more job openings, indicating that inflation may not be under control as we actually thought, and there's more disposable income in the system, which leads to higher inflation. Therefore, we're less likely to have rate cuts, and that's very bearish for risk on assets. So we can see that the ISM index actually came in a bit hot too. We can see we had a massive red candle on the day for Bitcoin over there, and another one today so far. And for Ethereum, we had the exact same thing over there. And of course, the stock market initially came down straight off of that news as well. And all of these charts have bearish engulfing candles if you look very closely, which is quite concerning. So we definitely need to be looking at what's likely to happen next. Now you can see the probabilities for a rate cut actually massively shifted yesterday. So you can see that the probability of a rate pause again has shot up to 95.2%, and the probability of a rate cut has gone all the way down to 4.8%, as you can see over here. So this is essentially why, as Miles highlights, that we actually want to see a weaker economy to see our crypto go up. And this is because a weaker economy means more rate cuts, and more rate cuts means risk assets actually increase. So good economic data is actually bearish for markets, and it's actually quite ironic because usually it's celebrated. But looking deeper into this, I think it's a massive trap, as Mr. Crypto actually highlights that we have a rate pause decision that's very likely, and within these environments typically we have the most parabolic moves as people are more certain of what's to come, and any rate cuts actually come as more of a surprise potentially. So definitely, if we do get this consolidation for the rate in the US, I think that it's going to be massively bullish for risk on assets. For the imminent short term, you can see that we have bullish divergence on a 1 hourly time frame for Bitcoin, where we can potentially see at least some sideways chop and slow down from this massive aggressive sell-off from the bears. And maybe if we don't have enough bullish demand, we can continue the leg down. But I think it's likely that we can actually see a small increase in price and then actually feel some inefficiency and grab some short liquidations that's literally above us. And then from there, we can actually determine if we're going to see a lower high and then a move all the way down again, or we can actually resume the upwards momentum again and start punching in new higher highs after we brutally rejected at 102k. So you can see we've been grabbing the liquidations in the short term for the longs. And if we go into the 3-week liquidation heat map, you can see that we've been grabbing all that liquidity to the downside. However, this is one massive trap that a lot of people are actually missing. I've seen people actually getting really bearish, but they're not seeing that there's a lot of liquidity above us right now piling up from a lot of shorts. So it's likely that we can actually see a price increase, as the incentive for market makers is to push the price to the majority of the liquidity, as that's where the most transactions are actually taking place, from shorts being squeezed and from longs opening, from longs closing for profits. The fees generated are where the market makers actually make profit. So therefore, by extension, you can see that it's likely that we can actually come up to the upside. However, we need to be evaluating if it's a good time to be actually taking longs in the market now, as timing is everything within these markets. So you can see over here, this is one reason that I've been mentioning on the channel for my last few videos if you've been tuning in, that one reason I was slightly concerned as well was the daily exchange volume. So you can see the daily exchange volume is really low, and this just indicates that any moves that we do have now, even if it's a massive pump, may be more artificially driven, as it's more easier to manipulate price when volumes are low. So we definitely need to see this start pumping up, as the last thing we want to see is a massive pump off of low volume. One thing that I'm taking note of is the long to short ratio on a 24 hour is actually massively skewed to short. So you can see shorts opening up at this level. You can see people actually adding to their shorts and getting a bit greedy, and majority are always wrong, as statistics actually indicates. One thing that's making me actually stay on my toes and actually be evaluating if we can actually get a bounce in that imminent short term. So you can see funding rates are really low, and if we go into the funding rate heat map, we have really low conditions here, which is healthy for us to start buying a dip and actually accumulating it at these levels, because when funding rates are extremely high, the risk to actually be benefiting from longs actually decreases the higher we actually go. So this is the time to be paying attention, in my opinion. So you can see for the Bitcoin ETFs, we had a massive inflow yesterday. You can see that BlackRock had a big inflow, and that averaged out at a net positive for the dump yesterday that we had, which is really bullish. It shows that the demand is there on the institutional side, and when that's combined with the retail demand, I think things will actually go massively parabolic in the higher time frames. Yes, we need to be looking at the relevant levels where we can actually see that demand actually kick in. Then we can be evaluating within this region over here if it's likely we get a lower high and actually come all the way down again before resuming the uptrend, or if we can actually start punching in a new trend over here where we have a low, then we have a potential higher low over here. We come up and confirm this one, clear this high over here, and confirm that to another higher low there, and then this will actually be a massive trap, and we can actually have an uptrend. That is definitely likely, but I think that this massive move down with the bearish engulfing candle on the daily time frame and the 3 black crows is definitely concerning, where we have to be evaluating if this bounce that may be incoming now, that's likely, is actually going to be getting short-lived, or if it's actually going to be continued. So you can see that we've been ranging for about 58 days over here. So that is actually healthy, as we actually cleared all the funding rates when we were in this region over here. You can see that the Bitcoin funding rates were actually quite heated, and this correction where we actually had a nice liquidation wick to actually clear that, and we just continued to chop around, helped to actually revert the funding rates to neutral and even slightly negative on some coins. So that's looking really good for the longer term bull market. And if we can actually hold some support on some of these levels, then definitely we can actually enter that bull market. As you can see here, we need to be prioritizing horizontals over our trends, because we're stuck in a range now and we need to be very precise and we need to be on our toes. So I do see that potentially we can have a bounce within this region. The reason is, as you can see on Twitter over here, is that we have a nice 65618 golden pocket of support over there, taken from this swing low in towards our rejection point over there. You can see we spiked in towards our mid-range, taken from these points over here where we had massive inflection points, and you can see of it there we had a nice mid-range where we had lots of points of rejections and support. We also have our previous week's mid-range, so I'm expecting at least a return to our daily open or our weekly open, and potentially within this region over here we can actually see if we can actually break above, because if we don't, I do expect us to have a lower high and actually come in towards some lower targets. So if you zoom out, you can see we have this liquidity wick that potentially we can fill a little bit. We have our previous week's low where we can actually sweep and get a deviation on both sides over here, and then potentially resume the uptrend. So as you can see, we have our inauguration window plotted over here, and this is one reason why I'm still actually staying bullish. So I've covered this on many videos, so go watch the previous videos to actually get more on that. And you can see that we have a cup and handle over here, and we have a breakout target from our base to our neckline over there, and that lines up at 120k, which is our projected range highs over here for this fractal, where we're actually holding a range quarter very well. And this is something I've been covering on the videos a lot, so make sure to be actually going back to the old videos for a bit more depth from this. But this demand here where we haven't even closed below this range quarter is really making me bullish, and these choppy environments over here is just another opportunity to be accumulating, in my opinion. I think that we can definitely be looking at some sort of like bull flag where we actually come in towards the apex and actually have a massive squeeze in towards 120k. That's definitely an option, and what that would look like on the lower time frames is a potential moving towards our previous week's high. And if we actually do reject, let's just be a bit more nuanced here. We reject, we come to our mid-range, and maybe we get one more sweep towards our previous week's low, then we can actually look at something like this where we actually send from there, sweep all the liquidity, and this will actually be a massive convergence in towards a central point where we actually have a nice bounce from this level over here. So that's something to be watching between now and next month. So if you're enjoying the video and you want to be trading yourself, make sure to be checking that first link down below. If you check that first link down below, this will take you to this page over here, which is the sign up page for Blofin. Blofin are one of the best exchanges out there, guys. They are one of the lowest fees. They have fire blocks, which just means that they have a third-party custodian so that your funds are more secure. So definitely be checking if this is available in your country, as I definitely recommend Blofin. These guys are really good guys, and if you agree with the analysis and you agree with my opinion, then definitely looking towards signing up with Blofin so that you can take advantage of this opportunity. So for that longer time frame, you can see that we're still following this fractal exactly to the T. So ever since Bitcoin's history, we've always had the first year being very bullish for Bitcoin. And you can see that typically when altcoins are in the mix, we have the bigger cap coins running. And then after in year 3, we have massive alt season where Bitcoin moves parabolic and the altcoins outperform Bitcoin typically. So this is the time to be paying attention, as we're in year 3, 2025, out of this 4-year cycle where the opportunity lies to be accumulating more Bitcoin through investing in altcoins and making an outsized return. And speaking about investing in altcoins, we still have Ethereum playing out this massive symmetrical triangle over here, which is looking really good. We're still having a low and then potential higher low over here, so we need to be monitoring if this will actually hold a support, because if not, we have this green zone over here where that was previously support and then we broke above it over here. So even if we come in towards the support and actually wick in towards it and potentially see some demand kick in, that's still a nice opportunity to be getting Ethereum and watching for this inverse head and shoulders to potentially play out once we do clear the neckline at $4,000 per Ethereum. And for Ethereum over here, you can see that we still haven't broken out of this massive cup and handle. We have a measured move taken from the base to the neckline, and to the anticipated breakout is in and around that 7.3k mark, and that massively lines up with our bull market top and bear market bottom Fibonacci projection, the 1618 Fibonacci, at the 7.3k mark exactly as well. So that's looking really good for Ethereum. If we can actually start breaking above our 4k mark decisively, that will be a massive support zone where we can actually be loading up for that massive run. And speaking about Ethereum outperforming Bitcoin, we can see that we're in a massive bottom phase for Ethereum here, as we've come into this demand zone. And if we can actually start breaking out of this massive falling wedge, we can actually massively move up for Ethereum, which will be really bullish. So that would actually coincide with a Bitcoin dominance top. And you can see that if we break down from this upward sloping support line and actually start moving down and towards at least our mid-range over here and around the 48% mark, that will actually confirm a massive alt season. And you can tell by the hammers here, every time we have a Bitcoin dominance top, we have an aggressive move down. So this is the time to be paying attention, because it's really short-lived. It happens extremely quickly, and the time to be paying attention is now, because once we do start bouncing again, the next leg is going to be the massive violent one before we actually potentially moving towards the next phase of the cycle. Speaking about altcoins, you can see the altcoin season index marks at 45 right there, and it's just at that mid-range. So we need to actually see this start turning up, which will mean that we need to see a bounce in the market, and that can be a massive opportunity to be accumulating. So I think the altcoin index is at decent support now, and we can actually see a potential reversal anytime from now, and this will confirm as a higher low, where we can actually start moving back in towards the altcoin season index. And typically, once you do cross the 75 mark, the pumps are very short-lived. You can see many times we've entered that zone and just rejected straight away. So I do think that the time to be getting in is below the 25 mark, and the latest, I'd say 55. After that, you're typically quite late and the moves are very parabolic, and your positions more or less turn into trades, as you can't really hold them for a long time. So in my opinion, I think this is a great opportunity to be staying bullish and actually be accumulating the dip, because the bears that are saying we're not in a bull market, we're going to be seeing 60k, we're going to be seeing lower prices, I think that they are not seeing metrics like this that indicate that we're on support now. We've already had the dump down, so it's very imperative to be staying optimistic and be looking for the opportunities. As you know, Warren Buffett himself, one of the best investors, says that he's very greedy when others are fearful, and very fearful when others are greedy. That'll be it for me, guys. Make sure to be following me on Twitter to stay up to date with consistent updates over here. As you can see, sometimes I do post some of the analysis and the charts that I do include in the YouTube way before I actually post this video, so make sure to be following me on there with post notifications on, so you can be updated with all the analysis and different things over here. And some of the charts that I can't include on the channel, for example, you can see over here we have a nice chart of Ethereum against Bitcoin, the massive catch-up trading play. And this is a nice chart that I posted on Twitter, but I didn't post on YouTube, so make sure to be following me on Twitter, guys. But yeah, have a blessed rest of your day. Peace, guys. See ya. Bye bye.